Okay, can you see the screen?
Yes.
It says DCA? Okay. Want to make sure. Okay. Did it turn for you?
Yes.
Okay. So
Yes,
I just
ma'am.
want to welcome everybody to the City of Grantville's Lunch and Learn. My name is Trisha DePadro. I'm a CPA here at DCA. As we kind of introduced before, Grantville is part of the newest rural zone communities designated. They were designated in January, and their designation began January 1st, and it ends December 31st, 2030. It's a 5-year designation. Like I said, this is informal, so if anybody has a question, just shout it out because I can't see you guys anymore with the presentation on the screen. And I have to face the camera. Okay. So these are the rural zone communities that are active currently. There's 37. Here's Grantville's official rural zone map. And I'm sure the mayor and everybody else over there at City Hall have copies of this they can give out. We do have it also on our rural zone website, DCA's rural zone website, in case you need to look and see if a parcel has been included.
Church.
So the purpose of today is to understand the 3 rural zone tax credits, and I'm going to walk you through the process of utilizing them. So the rural zone program came into being after House Bill 73 was signed into law in May of 2017. It stands for Revitalizing Underdeveloped Rural Areas legislation. And its purpose is to incentivize businesses to stimulate investment, job creation, and economic development in rural downtowns. So in assisting in revitalizing rural downtowns, 3 incentives are offered. There are incentives, offered: job creation, commercial investment, and business activities. And they're incentivized through 3 Georgia income tax credits: the job tax credit, the investment tax credit, and the rehabilitation tax credit. Now, this job tax credit is different than the regular job tax credit program. This is the job tax credit under the rural zone program. And the key to unlocking any of these 3 credits offered are jobs being created. So to describe further a little bit about these incentives, the job tax credit is for a new business owner that creates at least 2 new jobs, and it's quantified in FTEs. We'll get into that in a minute. Or an existing business that hires at least 2 new employees located within the designated rural zone of Grantville. The investment tax credit is for investors who purchase a building within the designated rural zone. And the rehab tax credit, rehabilitation, which we'll call rehab through this whole presentation, it's a credit used to offset development costs associated with the rehab of a property located within a designated rural zone boundary.
So let me ask you a question. Let me interrupt. Sure. You put that the jobs are the key. However, you don't have to have jobs created to get these other 2 tax credits, correct?
Incorrect. You must have jobs created in order to open up any of the job tax credits to be allowed to be taken. So the key is, under this program, the key is creating jobs.
Okay, so let me ask this question, because that's a little different than what I thought. But so as an example, this is where it gets a little bit, I guess, convoluted. And anybody who wants to jump into this, please do so. I would say the majority of the people on this call who are owners are property owners. They may do rehabilitation on the properties, et cetera, but they will hire nobody because they're not the business owners.
Right. Well, they don't have to generate the jobs. Someone in that building must generate jobs for
So
anybody,
if they rent it,
including
so the
investment
renter,
or rehab.
okay, but here's the question now. if the renter generates the jobs, then the property owner gets the tax credits, not the business renting.
No, the business owner that creates the jobs will get the job tax credit. However, that will allow, by jobs being created, that frees up the ability for the person that owns the building to take advantage of their investment tax credit at that point. So until jobs are created, nobody gets any credits.
If it's pre-existing. So, okay, I have a building, correct? I redid it a couple of years ago, a block. So with this last year, I just redeveloped it and we have three new businesses in there, creating a whole bunch of jobs, right? So are they in, because that's happened, will that stand? Because there's three businesses, they're creating a lot of jobs as we speak right now.
Okay.
So they could use it, second bet, both of us right now, correct? It's already been, the building's already been fixed.
He's asking, can you go retro on this?
Yeah, at all.
You cannot. It has to be, the activity has to happen during the designation period. So if you purchase the building after January 1st, 2026, then you would get the investment tax credit when jobs were created in that building. If you rehabbed it, the rehab expenses have to be January 1st, 2026 through December 31st, 2030. And the job creation needs to happen within that time as well for the rehab credits to be allowed to be taken.
So even if I purchase, like I'm starting it today, a building, correct?
Okay.
And so, but I am hiring people to do the work. So I'm creating jobs to actually fix the building, but that doesn't count.
That doesn't count. You're correct.
Okay.
Okay.
Does his rehab qualify the building since he's beginning renovation on it?
Yes, if the renovations begin after 1/1/2026, and then whoever gets in that building, say the renovations take until September, or they take until the next year, then once those jobs are created, he saves his receipts, he saves his amount of his rehab expenses, and at that point, then he's allowed to take the rehab credits. Okay, I'm gonna move on. Is that okay? I'll address some of these questions you're having throughout the presentation. So hopefully things will become a little more crystal clear at that point. Okay, why isn't this turning? Zoom slideshow. Okay, here we go. Make sure I didn't miss a slide. Yeah. Okay, so what is a tax credit? Most of you guys, if you're in business, you probably know it's a dollar for dollar reduction of income tax owed. Tax credits generally save you more in taxes than deductions, because deductions only reduce the amount of your income tax that's subject to tax, whereas credits directly reduce your tax bill. Okay, so the Rolls on Tax program is a state of Georgia income tax credit. I'm on a presentation. No worries. The rules on tax credits cannot be bought or sold. They're non-refundable, meaning you may use the credits up to the amount of your tax bill. The remainder is carried forward to be used against future year tax liabilities. So it's not just for new businesses, but also for the expansion of existing businesses in the downtown. Okay, is it not? Oh, I forget. It's not. There we go. Sorry. So the key to the rules on tax credits is job creation. So it's the key to unlocking all three of the rules on tax credits. Sorry, see what numbers should come up that way. Okay, so for the job tax credit part of 3 credits, the job tax credit, the threshold is 2 jobs. They've got to receive W-2s, and the jobs must be created in the same tax year. There's a $2,000 credit per new full-time equivalent job. Now, an FTE means an aggregate of employee hours worked totaling 40 hours or more per week, the equivalent of 1 full-time job. So here's an example. 4 part-time workers each work 10 hours a week. 4 workers times 10 hours is 40 hours or 1 FTE. Okay. Eligible businesses are going to include professional services, retail, light manufacturing under the North American Industry Classification System codes listed here. So the type of businesses that you're going to want in your downtown are law offices, gift shops, restaurants, veterinary offices, brewery, bakery, bed and breakfast, and bank. So keep in mind the credit cannot exceed $40,000 credit per year for the job tax credit part of the rural zone credit. So that's 20 jobs. And the credit can be taken for 5 years as long as those jobs are maintained. Now, it doesn't have to be the same person in the job. It just has to be those jobs, someone working the jobs. So I don't know about you, but I learn better by example. So two sisters decide to open a home health care facility in a building located within the boundaries of Grantville's rural zone. The two sisters work 40 hours a week and hire 4 high school students who each work 20 hours a week. So you've got with the team leader, is that Al or who is that going to be your team leader? Robbie?
Yes.
Okay. So you have this listing, which probably all of you do because you're on the orientation call. You've got to always check the NAICS code of the business with the team leader, who is Robbie. So the NAICS code for a home healthcare business is 621610. And here is the listing of business under the 62 code. And as you can see, it's not on there. So in this business, it's not going to qualify. So they're not going to get a job tax credit. And if someone was dependent on them for an investment credit or a rehab credit, they're not going to get their credits either. It's got to be a business on the approved list, which this that you see on the screen is just a portion of the list. So I just screenshot the portion that would apply to healthcare and social assistance. So let's do another example that qualifies. Two sisters open a women's clothing boutique on the first floor of a building located within the boundaries of Grantville's rural zone. Is this NAICS code eligible? Yes. It's NAICS code 44812, a women's clothing store. So let's do another example with that same beginning. Two sisters open a women's clothing boutique on the first floor of a building located, again, within the boundaries of Grantville's rural zone. The two sisters work 40 hours a week and hire 4 high school students who each work 20 hours a week. So let's look at what's their tax credit over 5 years if all the jobs are maintained. So first we got to figure out how many jobs have been created. First, we know the NAICS code is a good code. So then we can go on to these questions. How many jobs have been created? So we're going to take 2 full-time jobs of the sisters at 40 hours, so that's 80 hours, and 4 part-time jobs at 20 hours each, that's another 80 hours. So they've got 160 hours, and you divide that by 40 hours, and you've got 4 full-time equivalents. Now, even if the sisters worked 80 hours a week each, that still only counts for 40 hours. You can't, the most one person can qualify for is 1 FTE. So what is their tax credit, the business tax credit over 5 years if all 4 jobs are maintained? So they've got $8,000 a year times 5 years. They've got $40,000 in credits they're looking at. So who can create the jobs? The owner of the building can create a business that employs the jobs, or the owner of the building can lease out the space to a tenant that creates the jobs within the NAICS code that's approved. So who gets to take the job tax credit? The business that creates the job gets to take the tax credit, the job tax credit. So in summary, the threshold is 2 FTEs, 2 jobs. Employees must receive W-2s. The jobs must be created in the same tax year. There's a $2,000 credit per new full-time equivalent job. The business must have an eligible NAICS code. The job tax credits cannot exceed $40,000 per year, which is equivalent to 20 jobs. The credit can be taken for 5 years as long as the jobs are maintained. If the jobs aren't maintained, if at least 2 are maintained, they get to continue taking the job tax credit on at least those 2 jobs, and it will allow the rehab and the investment folks to take their credits. So do we have any credits on the job tax credit part? Holler out if you need to. No
ma'am.
questions? Okay. So let's move on to the investment tax credits. It's equivalent to 25% of the purchase price, and it cannot exceed $125,000 when you take 25% of the purchase price. It's got to be purchased after January 1st, 2026, which is when Grantville's designation began. An eligible business must be located in the investment property and create and maintain a minimum of 2 full-time equivalent jobs. And the credit must be prorated equally in 3 installments over 3 taxable years, beginning the year when the property is placed in service, unless the jobs haven't been created. So if once the jobs are created and the building's obviously been placed in service, then that frees up the investment tax credits to be allowed to be taken for 3 tax years. Does that make sense, everybody?
Yes.
So let's look at another example. Local developer purchases a 2-story, 5,000 square foot building located within the Grantville rural zone for $400,000. His plans are to renovate the entire building into 4 apartments on the 1st and 2nd floors. What's the amount of his investment tax credit? 0, because you've got to create a business. You've got to have a business within the building that creates jobs. So these being apartments, nobody's at a job. So let's go further with the same example, except his plans are to renovate the 2nd floor into 2 apartments, and the 1st floor is going to be leased out to a new law office with 2 full-time employees. So what is the amount of the investment tax credit in this case? So it's 25% of the $400,000 purchase price, and that's $100,000. So what is the developer? And that doesn't exceed the $125,000, so we're good. $100,000 doesn't exceed, so we're good at $100,000. So what's the investment tax credit over 3 years if the 2 jobs are maintained at the law firm? So we take $100,000, we divide it by 3 years, it's $33,333 a year. So some various FAQs related to the investment tax credit. Can the investor who purchases vacant land within the designated rural zone receive the investment tax credit? Yes, they may. Can the investor take the rehab credit, which we really haven't talked about yet, for the cost of constructing a new building on the vacant land? The answer is no. Infill is not allowed. So if you're building a brand new building, that's not allowed, unfortunately. But they would get the investment tax credit for the purchase of the land.
Okay, so hold on.
Okay,
So
go ahead.
you only get the tax credit for the purchase of the land.
Yeah, in that case. However, if there was a building already there and you purchased it during the Grantville rural zone designation period, then that would qualify. And you could do rehab. Say you had to rehab it to get a tenant in there because it was, old or whatever, it had been used as a storage facility, something like that. You've got to make it to where it's usable for a tenant to get in there, or you're building it to suit whatever tenant wants to come in. Then those rehab costs would be included in the rehab tax credits because it's taking place. The expenses are being incurred during the rural zone designation period for Grantville.
Okay, so I'll ask one more question on that, and I know this is a curveball type question. I buy a piece of land with a building, and basically I have to tear the building down and start over. Now what?
Okay, you would get the investment tax credit, but not to construct the building again.
Just for the land?
Yes.
Okay, all right.
And then, of course, jobs would have to be created for the investment tax credit to come into play.
Tricia, I want to curve that curveball. What if you
Sounds
buy a
good.
building, it's 10,000 square feet, and you rehab it, but you add 5,000 square feet to it? How does that work out?
The 5,000 is not included,
So we have to do some
unfortunately.
sort of math or some sort of
Yeah, you just
organization with numbers that says how much money went into one side but not in the other.
right. You can
Got it.
hopefully separate those costs or do, like you said, some kind of, me as a CPA, and I'm not preparing your returns, I'm just speaking off the cuff. Don't take this as
Sure.
Bible, but I would take the costs and kind of, if they were all mashed together, I would take kind of a percentage
Yep.
of the cost. If it was all lumber, there was no lumber used in the old part of it, of course you'd take all the lumber and put that in the new part. But if there's some
Got it.
electrical that like had to be rewired the entire building, then I would kind of percentize that, take a
Yep.
percent and put it to the old part of the building and put it to the new part of the building. But that's if I was doing your tax return. And like I said, don't take it as Bible.
Got it. Thanks.
Sure. Okay, so
One more question, and this is for Nate. This is for Nathan's side of this on the mill and Kip. So their general plan is they're going to leave the main mill building there for the most part, and then put commercial in the front of that building. And you guys correct me if I'm wrong. And then use the back of the building to put in 20 loft apartments. Now, how do you
Really?
determine? How do you?
Whoa, that's a
How
lot
do
of
you?
apartments.
Right. How do you determine then what is the capital cost that went in? Because the whole building has to be redone.
Well,
Well, it's all of it, right?
at that point, honestly, you're probably going to hit the watermark of it. You're going to
Yeah, I
hit the
mean, if we're putting,
125,000 when you take all your costs and take 25% of that. I'm betting you're going to be above and beyond
Okay. But you see what I'm
125,000.
saying is that only a
Yeah,
portion of the building is commercial, the rest is
right.
residential.
Well, we've used that example. This credit is not that old. So there are times when someone will send me a question that is a curveball, and we haven't had that situation. So I have a great rapport with Department of Revenue. So we'll get on an email string or a call and work through whatever it is. Because the example we use is where 5,000 square foot and two are apartments and two are the bottom half is a business and the top half is two loft apartments. And the example even separates 150 and 150,000, but it's put together to get the total amount of the credit. I would put the total amount together to get
well,
credit.
and
It's the same
just to
building. Is it the
clarify,
same building?
well, yeah, it's one big building, but I mean, based on the threshold, we're going to create two jobs. And if we can only get 125,000, then if we spend $1 million on rehab or more, it's not going to matter above. And we're going to spend at least $1 million on the existing building. So we're going to max everything out on this project anyway.
Exactly.
Yeah. So we'll cross every hurdle and just max it out.
And you feel free to reach out to me. You'll have my email address. Robbie and all of them can provide it. Dennis can. If you have some weird question like that and you want it in writing, typically someone will want something in writing for their CPA or for their own files. So I always ask them to send me an email and then I can answer them via email so they can have it in their files. And God forbid DOR audits you. You can pull up those. And like I said, I have a great rapport with them and the auditors. And, we can work through it. If there's a notice, reach out to me. Feel free to reach out to me. I'm more than happy to look at it, to talk you through it, to talk to DOR, send it to DOR and say, why was this just, just in general. But if you have a curveball question, something comes up out of the ordinary of what you're saying is going to happen, if you're planning on happening, that doesn't always happen. So feel free to reach out if you've got other questions related to something. But that must be a massive building. I would love to see that when it's done.
We'll invite you to the grand opening.
Please do. I'd love to see the apartments, all that. That sounds so exciting for you guys and Grantville. Oh my gosh. I
Kip,
haven't heard of
you
any
better,
other.
Kip, get your britches on. She's raising
Yeah.
the bar on you, Kip.
Well, I haven't heard of any other rural zone over the last, since 2018, so like 8 years that this program has been in existence, that big of a project. There have been projects, you'll see an example of a project. throughout this at the end of this presentation, but man, that sounds awesome. How
Yeah, we're
awesome for
excited.
Grantville. Yeah. So, all right, summary. Investment tax credits are equivalent to 25% of the purchase price. Credit can't exceed 125,000. It's got to be purchased on January 1st of the year the community's designation begins, which for Grantville is 1/1/2026. And an eligible business must be located in the investment property and create and maintain. The maintain part is so that you guys get your full 3 years on the investment tax credit. If they don't maintain the jobs in year 4, they don't get the job tax credit. You wouldn't get your credits, but you've already taken your credit, so it doesn't matter. So anyway, so at least 3 years you want the jobs maintained, the 2 full-time equivalents. Does that make sense? Since the investment tax credit is over 3 years, you want to make sure there's eligible jobs in there for those 3 years at least.
Yeah. Well,
Okay.
yeah.
So moving on, are there any other questions related to the investment tax credit? Okay, we're going to move on to the rehab tax credit. It's equivalent to 30% of the qualified rehab costs, and it can't exceed 150,000. So this is where you guys would come in. The investment was 125. So when you purchased it, if you purchased it for, $500,000 or more, you're only going to get 125,000. But for this rehab tax credit, you get 150,000. It's 30% of your qualified rehab costs, which $1 million times 30%, yes, you're going to get 150. It's qualified rehab costs are labor and materials. Not every cost. If you were the business going in there and you were doing rehab, it's not every cost that goes into starting a business. So it's just labor and materials to get the building ready to have a business in there. Or if the business is in there and they need to modify it, they're a restaurant and there's no stoves or whatever, the cost of the stoves doesn't, is not part of the rehab costs. But if they had to put, walls up or that kind of thing, that would qualify as rehab costs. In this case, also an eligible business must be located in the investment property and create jobs. This credit is also over 3 tax years, beginning with the taxable year in which the property is able to be inhabited and placed in service. So in this case, a taxpayer cannot use the same rehab costs to generate any additional state income tax credits. For example, historic preservation's state income tax credit for rehabilitated historic property. So you'd have to choose one or the other, whichever was more beneficial. Say you wanted to use the historic preservation for your rehab costs, you could, but you bought the building, you could still use the investment tax credit as long as the 2 jobs were created for you to use the investment tax credit and then perhaps use historic preservation's rehab tax credits. And the project, in the case of no historic preservation commission, must adhere to the rural zone rehab standards that we. So let's do an example of the rehab tax credits. Local developer purchases the same two-story building that's 5,000 square feet located within Grantville's rural zone, spends $150,000 to renovate the second floor into 2 apartments and $150,000 to renovate first floor and front facade. So the first floor will be leased out to a new law office with 2 full-time employees. I'm sorry, this is where I was talking about the 150 and the 150. So as you can see, what is the amount of his rehab tax credit? So we take the full rehab cost, the 300,000, not just the 150,000 related to the apartments because it's for the building. So it's going to be $90,000. 300,000 times 30% is $90,000. So what's their rehab tax credit over 3 years if the 2 jobs are created and maintained? So it's going to be $30,000 a year. Right. So keep in mind, historic buildings are 50 years or older. And in today's terms, that's 1976, which does not sound 50 years ago to me. It sounds like it should be 1950, but who am I to say? Okay. So If the property being rehabilitated is within a designated local historic district, subject to the provisions specified by Grantville's Historic Preservation Commission, a certificate of appropriateness issued by Grantville HPC is going to be constituted as meeting the required rehab standards for the rural zone program. So I know Grantville does have a historic preservation commission. Once they give the certificate of appropriateness, then you're good to go to take the rural zone credits.
Okay, so hold on.
Go ahead.
So it is a requirement to have a COA?
Yes.
Okay, what if we don't have an HPC? Because right now we don't.
Oh, I thought you guys did.
Oh, we have one, but there's nobody on it. There's nobody on
it.
It's empty.
Okay, well then here it is. So here's our rehab standards. You'll get this in the stack. And I took out a slide that I'll read to you in a minute. I'll pull it back up in a different presentation and tell you about it because there's, pictures before and afters and stuff like that. But here's our standards then. The property should be used for its historic purpose or placed in a new use that requires minimal change to the defining characteristics of the building and its site and environment. So if it's a tear down, then rehab could be taken on the inside, but once the building's constructed. The next one, number 2, the historic character of a property should be retained and preserved when applicable. The removal of historic materials or alteration of features and spaces that characterize that property should be avoided unless other solutions are not viable. And this is what we would be in discussion with. I'm just giving you the standards, then I'll give you how to handle it if the HPC doesn't issue COAs. Each property is going to be recognized as a physical record of its time, place, and use. Changes that create a false sense of historical development, such as adding conjectural features or architectural elements from other buildings, shall generally be avoided. Most properties change over time. Those changes that have acquired historic significance in their own right should be preserved and kept. Distinctive features, finishes, and construction techniques or examples of craftsmanship that characterize a property should be preserved if possible. Deteriorated historic features should be repaired rather than replaced when practical. Where the severity of deterioration requires replacement of a distinctive feature, the new feature should match the old design, color, texture, and other visual qualities, and where possible, materials.
Okay, so let me stop here, Kip. Let's first address the freeze properties. Basically, what you have shown that you're going to be doing, particularly to the outsides, would then be different. You would be altering the look, correct? Yep.
If you asked an opinion, I'd say we're altering the look, but we're putting it back, at least on the street level, back. The intention is to make it closer to what it was than what it is now. How about that?
Okay, so
and
Tricia,
guys, on that building, isn't that the building that's $1 million?
no,
Stuff going on? No, a different one. Okay, I'm
These
sorry.
are
No,
two
this is
different-
actually very much like the example that you were using with the 2-story apartment
Okay.
above and business below.
Okay.
so if you take a picture today and take a picture of what it's going to look like after they've done, they will look totally different.
It will
Totally
look totally different, but it might look at least like
Better.
I said, the street level would look closer to what would be historically.
Okay, so
correct.
right. So Tricia, how do you do that then?
Let me go through the last of the standards, then I'll pull up that other slide and we can chat about it.
Okay, and then one more question.
Sure.
This now, Kip, goes to the mill building.
Mhm.
Our mill, Grantville Mill, is no longer in the historic district of Grantville. We do not consider the building historic.
Okay.
So how does that work? I guess from that standpoint, they can take the credit for redoing the building, but they don't get a credit for keeping the historical standard, which God hope you don't.
Which is one of the same in this case, so they wouldn't get that.
Well, wait. So
Yeah,
you're
we
saying
get one or the other, right? We
Sorry?
get one or the other. We either get historical tax credits or we get the rehab credits, right?
Right.
So if we can't get one or we can get the other, we just need to figure out which one's best.
Okay, so Tricia, again, I'll restate the question then. The mill property and structures are no longer in our historic district. They're not historic. Now what?
Well, now, is it over 50 years old?
Well, they were built back in the 30s, yes.
Right, okay, so in this case, it is for rural zone program, it is a historic building. It doesn't have to be on a register or anything like that, but we're trying to maintain the look of how it was back in the day. And even the one that you're saying you're gonna modify it, but change it more back to what it was. I'll show you the process and we can chat more about that once I get done
Okay.
with
Here's
this
where
slide.
I guess I'm coming from, and it's a practical question: is how it looked back in the day. We have no pictures back in the day. There's nothing to show what it looked like. We can take a picture today, but we don't have anything of history. We have nothing to compare it to.
Okay. Because a
Well,
lot
and
of
let me
times,
just let
Go ahead.
me add some color to what everybody said. So we can still see all the original architecture on the outside of the original building. It was subsequently added to, which is clearly visible that it was done at a later date, maybe even within 50 years. It doesn't match the original architecture. You can see the brick lines where they added. So Kip and I's intent with that is to take down the newer section, and we're actually going to leave the old section. It's going to look just like it did. The inside is completely gone. So
right,
we'll use what we can. There's no old
and that's fine.
staircases or anything like that. So
But I get great. Keep going.
I think we're going to meet all these requirements either way. And so I don't think we're not going to have any issue, meeting these 10 bullet points on here. Kip, would you agree with that?
I agree. Yes.
Okay,
Yeah.
I guess I'm asking just a practical question. What are you comparing it to? Because there's no pictures to compare what these looked like 70 years ago. No pictures exist.
Right.
Well, so
But you could probably see, like you're saying, that what was added versus the structure that it looks. And you know what? At a certain point, it's do the best you can. If there's no pictures or anything like that.
Right. Okay. I'm just being practical on it. It's like, what are they going to compare it to? Well,
Right.
nothing.
Right. Right. And I'll talk to you about it once I grab that other slide. So to further, there's only 10 rehab standards, but they're very long. Chemical or physical treatment, sandblasting that cause damage to historic materials shouldn't be used. Surface cleaning of structures, if appropriate, should be undertaken to use the gentlest means possible. Significant archaeological resources affected by a project should be protected and preserved. You should undertake mitigation if you've got disturbed stuff. New additions, exterior alterations, or related new construction should not destroy historic materials that characterize the property. The new work should be differentiated from the old and should be compatible with the massing, size, scale, and architectural features to protect the historic integrity of the property and its environment. And the last one, new additions or adjacent or related new construction should be undertaken in such a manner that if removed in the future, the essential form and integrity of the historic property and its environment would be unimpaired. Let me stop sharing that. There it is. Let me stop sharing, and I'm going to pull up that other presentation because I removed I thought you guys had an HPC, so that's why I removed this slide. It speaks more to the rehab being done.
May I ask a question about the Historic Preservation Committee? When I wrote this grant, and whenever I've written grants that ask about the HPC, Al said the city council and the mayor made those decisions, and hopefully, Mayor, I'm saying this correctly, and that was, your de facto HPC. Is that incorrect? And could they then become the HPC?
We don't issue COAs, and we don't even consider them anymore.
Okay,
So the HPC was the one who would do COAs. Uh, our stance has basically been fix it up, please, and do what you need to do.
okay.
And we just don't have people on the HPC that people in Grantville don't volunteer for much. So we just don't have it. I mean, we have it, but nobody's on it because I think we have one person on it. So,
Okay. So when submitting rehab work for review, a current image of the building and the building address, obviously, drawings and renderings of the proposed exterior rehab work. I'll add this slide in before I send you guys to the stack. So provide drawings and renderings of the proposed exterior rehab work, provide the date the building was constructed and the source of that information, and provide historic photographs of the building if available. So if you can't do any of that, then you submit currently what it looks like, your proposed exterior rehab work, and that's what we can do. Excuse me, allergies. So that slide is what tells you and you got to work with me to submit these things, images, the exterior rehab, what it's going to look like, date the building. If you have historic photographs, you could find some online or something. I don't know. There it is. All right. So let me close that out one. Okay. Let me start sharing my screen again. Okay, let me know when you guys can see it again.
We can see it.
Okay.
Yeah, there it is.
So, okay. So we're past the rehab standards. Oh, oops, sorry, that's the wrong presentation. Doi, that was Warrington's. Here we go. Is that the rehab standards? Can you see it?
Yeah.
Okay, I can't see it. Sorry, I'm having a technical difficulty. Can you guys still see it?
no, we got the Pope. I'm sorry.
You got the Pope, sorry.
I'm sorry, I'm muted. I couldn't see it then. No.
Yeah, not now.
I closed the file, so maybe that affected it. It's not that though. Let's see. Jump into this and double check. Can you see it now?
We got the Pope again.
You're still in the Pope?
Yeah, we
It's
can see
cold,
the
though.
Pope.
Okay. It's doing the not responding thing, so bear with me. Oh, that's not. I might have closed the wrong one. Let me open it back up fresh. Of course, it says not responded. Bear with me. I'm not the best technical person. Okay, stop sharing.
Hi. I see you.
Okay, you see me?
Yes.
And Henry?
Mm-hmm.
I guess I closed out the presentation. I'm sorry. A former cohort, Cherie, was technical. So whenever we went out to do presentations, I only had to show up and do my part. Okay, it's opening up, folks. Down to it, and then I will share. Okay. Share again. Do you see it? Oh, start slideshow.
Oh, yeah, you could click this down here too.
Oh. Okay, now you see it, right?
Yes.
Boom. All right.
You did it.
I get excited because I am not technically savvy. Okay, so I had asked, they have a does Grantville have a historic preservation commission? And I thought it was yes, so I will add that one slide to this stack before I send it to you guys, so you know what needs to be included when you're corresponding with me.
So the answer though is yes, we do. It's just nobody's on it.
Right,
Therefore, it's non-functional at this point.
right, so it's as if you don't have one, in my opinion, so.
Correct.
Oh, this slide was in here, dang it. I thought I deleted it. All right. So can all three rural zone tax credits be combined? Absolutely. So I wanted to show you a good success story in Bainbridge. This is Southern Philosophy Brewing Company in Bainbridge. This picture right here is the original building. And this is the interior before they rehabbed it. Here's nearing completion. Those floors are amazing.
They're cool.
Yeah, I really like that window. That window's in the back of the building. Here's after rehab. And as you can see, that top right picture compared to that the white, creamy white building before, that's what they changed it to. So let's go back and look at it right quick.
Nice.
So they didn't keep exactly, you know what I mean? They changed the color, that, you know. All right, so here's more after rehab. They have like an alley in the back where they've got cornhole, and look how crowded that is. That is awesome. So for the Southern Philosophy Brewing Company, they created 3 jobs, so that's $6,000 per year. So they took all 3 credits, and this is the example of that. So total job tax credits $30,000 if they take the $6,000 over 5 years. The investment tax credit, they took 25% of $41,000 they purchased that building for. So that's $10,250. And their investment tax credit was prorated over 5 years. Now, prior to January 1st, 2025, it was over 5 years, but starting January 1st, 2025 and forward, the investment tax credit is over 3 taxable years instead of 5. So they got $10,250, $2,050 a year, and their rehab tax credit was 30% of $69,700, which is $20,910. And the rehab tax credits prorated over 3 years, so it's $6,970 a year. So the first year of their tax credits is $15,020, and the total tax credits they're going to earn is over $60,000. All right, so there's any questions on those parts? Because there's still more. All right, let's move on. So role and rule zone team leader. They're going to understand the basics of the program, but if you get into the nitty gritty or questions over time, over 5 years, you're going to know more. Team leader's going to know more and more. They're designated to sign off on the rule zone certification form, which we'll see in another slide. And they're going to work with the business to submit plans for rehab to DCA to me prior to the work beginning. So
Oh, that sounds like a lot of work. I think maybe the mayor needs to do that.
it's up to you, whoever wants to do it.
Well, he's out of the room, so we can designate him.
I can't see you guys, so I think that's awesome. That's fine. But you're going to have to tell him.
I will.
All right, here's the rural zone certification form. It probably looks kind of small on your screen, so I'm going to zoom into the part that the businesses are going to care about. So this is part one, which is where the business will fill out. They've got to fill out at the top under part one, the type of credit. They can, you don't have to fill out an individual form for each type of credit. You can put it all on here. The investment, you're going to put the purchase price on that line. If you're taking the rehab credit, you're going to put your rehab costs on there. And if there's job creation, if that's what you're taking when you file this form, the business creating the jobs, they're going to mark that box, and they're going to create at least 2 full-time equivalent jobs. So when you go further down, they're going to put their name, the address, location within the rural zone. Mailing address is different. Whatever parcel number is designated that space. You're going to put the NAICS code for the business creating the jobs. So I don't care if I don't need to know the NAICS code of the business that did the rehab. I don't need to know that. As long as the NAICS code is okay on the okay list, then everybody gets their credits. But it's for the job creation. It has to be an acceptable NAICS code. So then they're also going to put the name of the business creating jobs and then the number of FTE jobs created in that year. And, this form is only filed once. So if they have 2 the first year and they have 4 the second year, you don't need to refile this. This says you're allowed to participate in this program. So then the signature of the officer, the printed name, title, date, their phone number, and a legible email address. Please, I have time, I can't read them.
Can I ask a question about the jobs real quick?
Sure.
So like on our project, we may create, let's say we create 6 jobs full-time under let's just say our umbrella that we own the property under and operate it and all that, right? And then I've got 4 tenants who are all going to have, I don't know, let's just say they have 3 full-time jobs each. Okay. So when we create this, we're only putting the jobs that we're creating, or are we trying to put all of them on this original form, like guessing what our tenants are going to have? And then our tenants would actually be able to get job credits for their employees, and we would get job credits for our employees, right?
So now, if you're rehabbing the property, you have to be an acceptable NAICS code to get jobs. So it's typically your rehab cost is labor and materials. So that would include anybody working for you. But if you're going to be in that building, you own the building, you're also going to be in the building having a business, then it also has to have an acceptable NAICS code.
Yeah, so like we'll operate our property management, some offices. So we're actually going to have employees on site operating some of the areas of the property. So like if we do leasing, we'll have a leasing person. So we'll actually have employees on site for that entity that owns the entire project. And then we'll have tenants who will have others. So there'll be 2, so we'll get tax credits for our employees. They'll get tax credits for their employees, but it qualifies the project as a whole with our 2 jobs that we're creating minimum, right?
It does. And if your NAICS code is on the list, you've got to put it down there because you're the one creating the jobs. You're not, in that box will be checked for job creation. So if you were just investing in rehabbing, then you wouldn't even mark that box and the tenant would fill this out and they need to submit this so that they're allowed to participate in the program. Now, if you didn't have jobs that perhaps were under an acceptable NAICS code and you did the investment in the rehab, you kind of got to have a good rapport with whoever's creating the jobs so that you can check in with them and make sure, okay, 2 jobs have been created. And then the next year, have you maintained those? So as long as your credits are being strung out, you need to make sure, say in the case that you didn't have job creation, you would need to make sure for the 3 years you were taking your credits that they had jobs. Because if they don't have jobs and they're the ones you're depending on to create the jobs, then you don't get to take the tax credits in the year that.
Well, and we won't have any issues with, we'll create so many jobs, it won't be an issue. So ours will be easy. But for something smaller, I know that might be a challenge to make sure if you've only got 1 tenant or 2 tenants.
Right. And also, if there's 2 tenants in there and each of them creates a job, neither of them get to take the job creation, job tax credit, but it will allow you to take the investment or the rehab. So say it is a smaller place and there's only 1 FTE in one space and there's 1 FTE in another space, Neither of them get to take the job tax credit, but it will allow you, it's the key that you needed to allow you to take the investment or the rehab or both or whatever.
Okay.
So you really just got to look at the jobs, being created. So, okay, we'll move on to part 2. Part 2 is where the team leader comes in. They're going to sign this and date it, put their title and email address legibly, certifying that this building or this person doing this certification form is within the boundaries of the rule zone. The full-time equivalent jobs have been created, and that the rehab, if that's being done, meets all local ordinances and licensing standards, as well as the rules on rehab standards, which in Grantville, if you don't have an HPC, then you probably just need to make sure they coincide with the rules on standards. Oh, one other thing I want to mention on this slide, when you put the purchase price down or your rehab costs, perhaps it's not, you found another $5,000 in costs or something changed on the sales price or something like that. What you put down here is not Bible. So if when you file the ITRZ form, which we'll get to in a moment, that's Bible. That's what DOR is looking at. On this form, they're just looking at it's been signed off by you guys and me so that you're allowed to participate in the program. So, and this doesn't limit you. Say the job creation, you have 2 jobs on there, but there's 4 created instead of 2. You don't just get what you put on this form is what I'm saying. If things change, say they were less, say you put 4 jobs on here and there were only 2, then you get to take the 2 jobs. You're not held to the 4 that you put on it. Same with the investment in the rehab. Does that make sense, guys?
Yeah.
Okay. This is not Bible, but it allows you to participate in the rural zone program on your tax filings. All right, so here's this, like I said, part 2. The team leader will fill it out, sign off on it, then they'll send it off to me, and then I'll sign and date it on part 3. And I will send you back a 2-page letter. We couldn't get it on 1 page. We tried. Well, here's an example of it being filled out. Like I said, they're doing job creation and they've got rehab, but say their costs were really they were $46,000, then they could still put that on their tax filing, or say they don't need to file another certification form with me to up the amount or lower the amount or change the amount in any way. So that just shows you one filled out with an example. All right, so then you're going to get a 2-page letter back from me. This is from Adele's Rural Zone, but this is the first part of it. And then here's the second page of it. I'll sign off on it and CC the team leader on it. And you guys need to keep that to attach to your tax return. So the team leader has a listing of acceptable codes. In the case that the NAICS code is not on the listing, there is a vehicle in which you can petition DCA to have your NAICS code added to your rural zone. It doesn't go across the board, but it would be for your rural zone. So you would petition the commissioner of my agency, DCA, for approval, and you have to do it before you take the tax credits. You can't just file it and hope it's going to go through. So, going to change. Okay, there we go. Sorry. You're going to petition the commissioner for approval before you take the rules on tax credit. So this is what it's called. It's called a request for determination. So it's a dated and signed letter written in paragraph form on company letterhead or the Grantville letterhead. So it's going to outline timeline, events, circumstances, what's going on, saying that what type of business it is, the operation activities of the business, what kind of customers are serviced by the business. And if it's on Grantville letterhead, it probably means Grantville is on board with that business being within their rural zone. If it's the business sending it, you've got to send me some kind of note or letter or something from Grantville saying that they're okay with this business being in their rural zone. I need contact information being as descriptive as possible. Now you're going to address it to Christopher Nunn, our commissioner. and you just email it to me. So if you want to snail mail, that's what it is, but just email it to me and we'll get it going through the process. So the process is it's got to be checked in. We got to look at it, make sure all things are in place, and then we write a letter back. It doesn't take terribly long time to get these requests through to the finish line. So in summary, the rule zone must be created in the two jobs must be created in the same tax year. Serious consideration needs to be made for the time the jobs exist. And any business taking these credits, I urge them to review and mock up the Georgia Department of Revenue ITRZ form. This is the form in which you will take your credits. It's all spelled out. Now, when I say I want them to review and mock up the Georgia Department of Revenue ITRZ form, I mean the ones creating the jobs. That's who needs to, because that's triggering any of the credits. It's an annual thing. So, clarification for new and existing businesses. The job tax credit under the rural zone, new businesses, generally employees can be hired anytime throughout the year and they'll net down to 2 net new jobs. For existing businesses, they need, they've already got employees. So they need to add employees if they're going to count them as new under the rural zone, for at least half to 3/4 of the year for that job increase to count. And I'm going to give you an example of it so you can see it. Here's page 3 of the ITRZ. If you're creating jobs, this needs to be filled out. Or if someone creates a job, one in one business, one in another, have them mock this up to make sure that they come down to 1 job. Same with the other business, if you're counting on them to create a job each to qualify for the other credits being taken. So here's the form. Here's page 3 and page 4. And I'm going to give you an example for a new business. So this is Douglas County's rural zone. If you're a calendar year taxpayer, you're going to put number 1 is going to be January in the year 2025. You're not going to have, you see the column that says prior year? You're not going to have anything in there because you're a new business. You didn't have a prior year. So for 2025, that's when Douglas's rural zone began. They didn't open the business until July with 1 FTE, 1 full-time equivalent. Then come August, they hired another. So now for August, you put the total for there. So they've got 2 in August. They keep those same 2 FTEs through to December. So on part 3, line 1 is the total full-time equivalent jobs. When you add all those numbers up, it comes to 11. Then the next line 2, number of months you're in operation, you're going to put, so 6 months they were in operation. Drop down to line 3, you're going to divide 11 by 6, and by rounding, you're going to come to 2. Line 4, you drop down to, they didn't have prior year existing jobs, so you don't have to subtract the prior year average. So then line 5, they'll drop 2 down to that line 5. And then if you move on to page 4, this is what their page 4 looks like. They've got 2 jobs in year 1, drop down to part 5, and it calculates the 4,000, and it's not greater than the 40,000. So they do get $4,000. Does that make sense, everybody?
Yes.
Just like a schedule, the business should
does
fill
make
out
sense, yes.
doing the jobs. Okay. And this is your CPA may fill this out, whoever does your tax filing or you. And if your CPA does it, you're probably going to have all this. You have to have this information to give to them. So you might as well mock one up to double check that you've created 2 net new jobs. All right. So here's a sample scenario, an existing business. They're rehabbing a building. They hired 2 employees within a single tax year. Okay. They have 1 employee in March and 1 in July. So why don't these 2 jobs count? Now I'm going to go through on the form and show you why they don't count. That's why you need to be careful and mock up this form when possible. So here we're in no name rule zone. And you've got the months filled out. So then in your prior year column, you're going to have your numbers of your prior year FTEs. Even though it was prior to your rule zone starting, just break your employees down so you can get FTEs for the prior year. So they had, one for 3 months, they had a couple for the rest of the year in prior year. Now come the next year, this is when they added an employee in March and they added another one in July. So they're up to 4. So when you add up the column prior year and you get your full-time jobs of 21, you're going to divide the fact that they were in business for 12 months. We rounded up to 2. So they had 2 prior year FTEs. So then move on to year 1 in their rule zone, and it adds up to 40, all those 2s, 3s, and 4s. Now they're going to divide by the 12 months they were in operation still, because they're an existing business. And the monthly average, even with rounding, comes to 3. So then when you go subtracting prior year 2 jobs, they only have 1 full-time equivalent job added. So that comes down to a big goose egg for them. So an existing business kind of needs to pay attention to when they hire folks. And even a new business, because say they hire 1 in January and then 1 in November, that's really not going to qualify either if you do the math. So it's like law of averages when it comes down to it. So when you do file for the rules on tax credits, you got to have the acknowledged rules on certification form, the 2-page letter I showed you the sample of from DCA, and then you've got to fill out the Georgia Department of Revenue form ITRZ. So I got some feedback from DOR saying that, people were like, why are we being disallowed the credit? And it's because they weren't attaching all 3 of these things to their tax filing. So that's it. So shower me with questions. Or did I answer everything?
I think we're good on our end.
Okay.
Yeah, it makes good sense.
Okay.
I'm going to take this back to the
Can
people
you?
that are
Oh, I'm sorry, Kip.
No, go
No,
ahead.
I was just guys. Can you email this out? I would
Yeah, I
love
was
to
gonna
have
send you
it
the
so that
stack.
we can see the examples in there, just to make sure when we're making sure we're doing paperwork and stuff.
Absolutely. I'm
Yeah,
going
with
to
the
send
email,
the
I'm
stack.
covered.
I'll send it to Dennis or Robin or Robbie or somebody so that they can email it out. Well, I think you guys are all on the meeting request, right?
Yeah.
Yes.
Then I'll mail it from there. I'll just do an attachment to that and send it to everybody.
Awesome. Yeah,
But
because it's very step by step. So this was very helpful.
Yeah, and it's like any other credit. It kind of seems easy on the surface, but then when you start delving in and having real life examples that you're going through, it's not as easy. So, feel free to email me, questions that you have. If something comes up 2 seconds after we get off the phone, feel free to email me, and I'm more than happy to answer. And like I said, put something in writing if you want it for your files. Just, I get a lot of, I'm going to stop recording. Oh, stop sharing and how to stop it. Oh. Was I not recording that whole time? How do I stop recording? Oh, okay.
Hey, Robbie,
I don't
you're
know if I
also
recorded
planning to
that.
put this on the City Hall website, correct? Is that possible to do that for other people
it's under
to see
there.
this?
Yes.
Great.
I think that was it. Is that it?
Yeah.
Okay. All right. I'm stopping.